Hello, folks. Hope you're doing well. Um, this is the ICT Mentorship 2025 in the Trading Bear Academy, and today we are kicking off with the candlesticks. So, in this video, I'm going to show you how each individual candlestick is formed. All right. I'm going to give you examples live on how they are formed. So I'm going to go live on TradingView and we see how they really open and how they close. So I don't believe if there is any other person who has ever done that. They normally tell you, they label the candlesticks, this is the opening, closing, blah blah, something like that, but they don't go live, and then you guys don't get the chance to see how they are formed. Nature, you just know that this is the opening, but you really can't understand, and it takes you time to understand that that's the opening or closing, or this is the week. Okay, so this video is going to be important, and it's very good for you as a beginner. I know maybe there's someone here who has already studied and they have an idea on how these are formed. Yeah, so but there are also others who are completely beginners. So this video is mostly favoring those who are complete beginners, and for those ones who have some idea, well, it's a blessing. Okay, let me draw your attention to this candle. Okay, before I proceed, let me first give you the key colors. Okay. Why did I have to do this? Well, a lot of you might be confused about the colors, but candlesticks are not based on colors. Okay, these colors are set by you. I can change them to blue, green, what, anything. It doesn't matter. But generally, these are the colors that are known or preferred by traders. Red, which represents a bullish market, the bearish market, and green, representing a bullish market. Okay, so the most important part about this is knowing the opening and the closing price. Okay, this lesson will help us when I'm giving you one of my powerful strategies that I use, that I've been keeping as a secret. By the way, in this mentorship, whatever I'm giving you is yours. Okay, you don't need to go and share the information to everyone, or trading has to be personal. Just keep it to yourself. Okay, let's get started. So let's focus on a bearish candlestick first, then we shall deal with a bullish candlestick later. Alright, so when you look at it, first of all, we shall notice this is a wick. They call this a wick or a shadow. So why does this wick really form or shadow? Let me first label this, then I'll show you how this gets to form. Okay, so this is our opening. Okay. And this is our closing price. Okay, and all this is our body. Okay, so let me briefly talk about the wick. No, okay, let me first talk about the opening. So price opened from here. Okay, this is where the candle was opened. In context to the time frame. So if they open, let's say for example we are using 1 minute. Okay, so for example it opened from here, so it will start counting 1 minute for the whole candlestick to be closed, and then open another one, and then the second one would also be 1 minute, because we are in 1 minute time frame, for instance. So it opened here, and why was this wick formed? It's because price first went up to here. Okay, and before the time stopped, it went up to this level. Okay, it went up to this level, and before, so when it went up above this opening price, okay, this opening price, when it went above, it was first green. Okay, when it went in, it was bullish, so it first became green, then up to this level. So we can say it first went green up to there, up to this level, then before price closing, but according to the time, okay, it went down again, and it crossed this line. Once it crosses this line and goes down, now it turned red, so it became a bearish market, right? It went all the way up to here, okay. Now it is the same thing. Okay, so when it went here, before time closing, it went back, started being bullish a bit, but before closing this candle, this opening, it means it went up to just here, then it consolidated in there a bit, or maybe went back and on, so it closed here with this 1 minute that maybe we are trying to use. All right, so what I've just explained is that price went up to this level, and then price also went up to this level. That's why it would be called a wick or shadow. Okay, what is so important? It is the opening. All right, because if however much the candlestick dropped up to here, I mean the body dropped up to, if before the time it went above this, that means it would have left all this portion as and it will leave it in the form of a shadow all week, meaning that price went up to there. So and then maybe it closes above somewhere here, that means we shall have only this. All right, I'm going to show you example on how they are formed. Okay, so I'm done with this. Now we go straight to the to the bullish candlestick. So it is the same principle here, only that it's flipped upside down. So we see this being our opening. Okay, and well, this is our shadow. Awake or shadow, and this is our closing price. This is our week as well. Okay, so now we bring the same idea from here up to this bullish candlestick. We can say this is our opening, so this is our focal point. Okay, oops. So this is our focal point. Okay, so when price opened from here, we can say that it went all the way up to here. So this was our opening. So if it goes down, that means it was bearish. If it goes up, that means it was bullish. So it first went up to here because we see this week up to its where it stopped. That means price went up to there, but time was a factor. Okay, before 1 minute the candle had gone back. So if it crossed this level, that means it will turn to green. Okay, so it crossed this level again, leaving this shadow here and leaving the opening price. So all of this will form our body. All right, and it went up to this level, but 1 minute wasn't yet done, so it went back. Maybe it was retracing and it retraced up somewhere here. Maybe it went back and on just like that. And then here we go, it closed 1 minute and then started another candle, leaving this shadow here and then leaving this shadow here. So this is our body. Okay, so let me first do this. I show you how this happened using a line graph, so that you can get to know it clearly. Okay, so this is our opening. So let's say that price opened from here and then it went down, it dropped down. So it went down up to somewhere here, and then before the time it crossed this line. I want to see it crossed this opening price, so it turned green. All right, and then it went all the way up to here, this level of the shadow. All right, so before the time closing, before it the 1 minute, it went back up to somewhere here, so maybe it consolidated in a bit. All right, this is how this was formed. And so seeing this bullish wise, we can say this was our opening. So price opened, normally it starts with a consolidation, then it went up this week, right? Then it started dropping lower and lower. Okay, so it went up to this level, and before the no, like the 1 minute was not yet done, so it went in back a bit, and then maybe it consolidated there, and then time stopped. So time is a major factor here that will make these candles form. All right, so let's drop into a live example and I show you guys. Okay, I'm using 1 minute for this, meaning that if I go to a higher time frame, there are lots of these candlesticks in these other time frames. All right, so we are here on this candle that is being formed here. We can count time here, so we can say that this was our opening price. Price had gone up here, so if this goes up, crosses this line, it would be green. Then we can say that okay, now this was our opening. Let's use this one. If it goes higher than this, it will be green. If it goes lower than this, it will be red. Let's see. So as I told you, now you see it went higher than this, so it's green. If it stops here and then goes back, it will leave a shadow, which it has done here. All right, and if it bypasses this, that means it will see, I told you, and then it went in a bit back, leaving another shadow. If it goes down, it will leave this, it will leave another shadow here. See, that's what I told you. And if it crosses this, it will be red, leaving all this shadow here. Okay, so it went up to here. We'll take this. If it goes down, it will leave a shadow on this particular point. Okay. The same here, this is our opening. Above green, above, below red. So it went somewhere here, then it left a shadow, and then it dropped lower. Okay, even here it left a shadow, so it's still here. It's here in the opening price. See, it's dropping lower and lower. Okay, see, it has left this shadow here, meaning that price went up to here but closed before the time. Okay, time. All right, so I think this one is going to end there. Okay, we're having another candlestick opening right now. Oops, what's up? Okay, so this one is actually, it's already opened, but okay, so here we go. We have it being bullish. If it retraces back, it will leave a wick here. See what I told you? This volume here. Okay, here we go. Okay, see. Right, another one opening. Above it will be bullish, below it will be bearish, as I told you. So if it stops here and goes and retraces back, it will leave a wick. Alright, see all this wick. If it goes higher, it will leave this wick still. Alright, so here we go. This wick, if it alright, here we go. If it breaches it, that means it will form another wick. This wick will be invalid. Alright, it just happens every single time. Okay, now it left this. So opening price, and then closing here, it closed right here. So we have this one, this is our opening, reached down, and then it's bearish. So if it leaves a wick here, that will be, if it will leave a wick. Okay, it left there. Reaches higher, that means it will be bullish. Okay, so here we go. Going lower, it will leave a shadow. Okay, it push higher and higher. See, left this wick here because it has gone up to this price level. So it's here. Okay, hopefully these examples are enough. So let me show you how it got to open. So you see, it was almost leaving all this gap. Right, so it left all this gap. All this is a wick. Opening price, okay. Now this was opening price. Price had gone up to this level, and then this was our closing price. Price had retraced up to here, then price has also gone up here as well. Okay, let me concentrate on this candlestick. You can leave along this. Okay, so how was this formed? The same thing. Now let me do it for you when I'm using a okay, this particular candle here, let me gonna do it in paint. It doesn't matter how long is the wick. Okay, here we go. Wick. So you saw that it was big. Oops. Okay, here we go. Okay, so let me first mark out these levels here. Alright. Okay, so when I do this in the line graph, we can see that this was our opening, this was our opening. So price opened from here, then it went up to this level, and then it started pushing higher and higher and higher and higher and higher. Then it went up to here, and then it dropped lower and lower and lower up to this level, and then maybe it consolidated in, and then it closed. All right, so close, open. So I think now you can see, you are able to see what I was talking about. Okay, thanks for watching. See you in the next lesson. I wish you good trading and a good day.